What does seem to be the reason, though, guys, is something that happened late last night. It's actually crazy. If you look at Bitcoin on the hourly chart, you'll see it like spiked up to like 107,000, and then it just like saw a sudden pullback. And this seems to correspond to when Republicans in the House committee basically advanced Trump's big beautiful bill super late, I think at 10 p.m. In the U.S. On a Sunday night, which is crazy. Even here, it's saying like an unusual late night vote. And why is that important? Well, the reason why Moody's had done this downgrade is because they're concerned that U.S. debt is rising too much. And if you actually look at the details of this bill, it's basically cutting taxes and then also increasing spending, essentially. And of course, so that, again, that's part of why Moody's did the downgrade, because they could kind of see that this bill was going to get tabled, and it's kind of in the first step of the process. It made it through the House committee, then it needs to be voted on by the House, and then it needs to be voted on by the Senate, and then it needs to be signed by the president. So there's still quite a few steps to go, but this first, I think, a late night vote was confirmation that, hey, like the Trump administration is going to continue spending, they're going to cut taxes. And if this sounds familiar, this is actually similar to what happened with Liz Truss, where she resigned, I think it was in 2022. Yeah, in October 2022, she resigned after tabling a similar plan. Of course, she blamed the central bank for kind of making the bond market weak. And it's kind of similar to what's going on now, right? Because Trump is blaming the Federal Reserve for making the bond market weak, and then now Trump tables this budget proposal. And of course, basically the reason why the markets are crashing is because the bond market is freaking out. So now we can finally start looking at some charts. Starting here, this is the yield on the 30-year bond. So this is kind of just like long-term interest rate, just for sake of simplicity. It's the yield on long-term U.S. government debt, which basically has an influence on long-term interest rates. As you guys can see here, you can see that these yields are basically about to explode to the upside. Like if it goes any higher than this in the next couple of days, then the 30-year yield is basically going to spike. And if you look at the 10-year yield and the 2-year yield and other interest rates, basically they all look like they're going to spike as a result of potentially of the spending bill. Like literally, it looks like it's about to break to the upside. And when that happens, guys, you basically see everything being sold off. And why is that? Basically, guys, it's because U.S. bonds are the collateral for the global financial system. And this is something that a lot of people don't think about, and it's hard for them to wrap their heads around. But basically, U.S. debt is used as collateral to take on more debt. Super complicated. But long story short is that if this trend continues, crypto and stocks will melt down, but this probably won't last for very long because, again, the Fed or the Treasury will basically have to step in and stimulate. And of course, that's going to be rocket fuel for the markets, especially for crypto. But again, first we get the pain, and then the gain potentially comes after. But again, in the short term, it actually looks like a pretty standard pullback.